we're starting. Hello and a very warm welcome to our event today here at Bruegel. My name is Guntram Wolf and I'm the director of Bruegel, and I'm pleased to host the session today discussing China's medium-term outlook. Will innovation save China from becoming old before it becomes rich? And I'm particularly pleased to be joined today by Jean-Francois, who is the president of the Asia Center in Paris and a known scholar and practitioner working on China and many other parts of the economy. And of course, I'm particularly pleased that my dear colleague Alicia Garcia-Herrero is here joining us physically from actually China, or from Taipei. So it's great to have you over and see you in person and do this event in person. And of course, I would like to thank you, our audience, for joining us online today. And if you have comments, remarks, questions, please don't hesitate to go on Slido and ask them. The code is not very original, but it is China. So just type in China, and then you can put your question on Slido, and I can read them here and react to the questions and post them to our speakers. We have two presentations, and after these two presentations, both will hopefully not be too long. We will have ample time for discussion so that in 1 hour roughly we will be done. Jean-Francois, thank you so much for coming here, and the floor is yours.
Thank you very much for the invitation. Thank you, Alicia, for having me on board at Bruegel. I'm very honored to come to Bruegel again. We have a great cooperation together, and I think this is a good time to talk about this topic. Yes, we call it would China grow old before it becomes rich? I think if you're Chinese, you have two objectives in life: to be rich and to grow old. So there is a contradiction to be sorted out. And I remember as early as 2005, we were already asking ourselves the question. However, the prospects at the time looked, should I say, much better. So I wouldn't be too pessimistic, because my presentation will not go to as many detailed figures as Alicia's. That's her job, and she's very good at that. I'm taking a quite provocative view, and I hope this will leave room for debate based on some figures, but also based on some very personal thoughts and observations. So the first observations are, of course, the observation that we are currently in a kind of a perfect storm. The perfect storm, of course, is not the health crisis, but the perfect storm comes out of China, and not again because of the pandemic, but because of a few elements happening in parallel to the pandemic. Because growth, as we will see later on, was slowing down already before 2019. And much more importantly, the population was growing older and older, with two parameters which are extremely negative. First of all, you have less and less kids, less and less young people in China, because they grew rich, and that's the point. When you grow rich, you tend to have less kids, and that's what's happening in China, and it has been happening actually since the early 1960s. A lot of people forget that China's population started, of course, kept on growing, but the number of kids per family decreased early 16, just because China was, we forgot about it, growing a little bit richer. But now China is indeed growing richer. The other parameter, which is very negative, is of course the disparity between males and females. And that's of course something very, very important in Chinese demographics. If you have this disparity, even though you want to have kids, you have a technical problem, if I may say. Of course, the Chinese government wants to have 3 kids per family and encourages it, but people do not follow. there will be lots of reasons we will look at to explain that. That's the first negative parameter. And of course, on top of that, you have the macroeconomics in China, and we all know about the real estate problem. And I mention it because there is liquidity, there is, of course, capital in China, but the question is, will it be allocated to the right area, like R&D, as we will see later on, or will it be used just to cure the current problems of the Chinese economy, especially in a context where China is closing down, as we can all see. Well, the charts, you know, of course, illustrate what we just said. Probably the important thing on the left side is that you can see the trend. The trend has some blips, ups and downs, but the trend is there. And the trend has not changed since like 10 or 15 years. Growth is slowing down. That's a normal situation. No country had as long a period of high growth as China had. So it's quite natural that growth would be slowing down. But of course, it all matters whether, as we will see later on, productivity follows or not. And if you have an aging population, like you can see on the right image of this slide, of course, that doubles up and makes the problem even bigger. And you can see the projection with a Chinese population which will reach a peak probably next year or in the years to come, and as at best goes down to 1,200,000,000 people, possibly less than that if you have, of course, fertility rate going down. But of course, the important thing is the yellow and blue part, with the people dependent, more and more numerous. Actually, Chinese growth benefited a lot from the relative youth of its population. The Chinese were young before, and now they are growing older. That of course, causes problem. Of course, we all know that being rich is a matter of also disparity within the population, and this is an illustration of the Gini factor and the dispersion of wealth. And you can see that China, as compared to Western countries, if you look at the Gini index, is on the left side, around 0.7. And if you look at the scale on the left, which is the percentage of population in the very high bracket of revenue, you can see that China is quite low. So you still have a gap, and you have lots of disparities in the wealth among the population in China. Now the question is, where is productivity? Alicia is much more eloquent than I shall be on that one, but this shows the components from the National Bureau of Statistics, the Chinese institution, looking at statistics, looking at the total factor of productivity during 3 different periods of time. And actually, you can see that the ratio of total factor of productivity within the general growth is slowing down, but the ratio of productivity is also decreasing in that in growth slowing down. The issue with research and development, of course, is highly related and correlated to what's happening with the chips. And this compares a few countries, and you can see that, of course, China is not very well positioned, as we know, in terms of imports and exports of high-grade chips. China is not making yet the highest grade chips, and actually is dependent on foreign countries for that. So, in a conclusion, I'm trying to look at the prospects for China. How can China avoid the traps that we look at? I tried to put myself in the shoes of a Chinese leader, which is, of course, very difficult. And I looked back at what was possibly the scenario in 2020. 2020, the pandemic arrives, and you think that the pandemic will be devastating, and probably devastating in the West as it is in China. So what is middle income trap? Is it to be trapped at a low level of income, or just be enjoyed at that low level of income by countries which will become poorer. And I think in some Chinese leaders' mind, the pandemic was an opportunity, if we can call it so, to have China be in the same bracket as other countries, because other countries were seeing their growth going down and their prospects being bleaker and bleaker. Unfortunately for Chinese leaders, this did not happen. So you still have to catch up on the high side and not being caught up on the lower side. So this scenario probably has to be discarded. It will not happen. Well, then you have, of course, what we can see now, which is building wealth and growth on this area which was built around the RCEP, the area which was built possibly around the Belt and Road Initiative, meaning that China would extract wealth from the outside with depending countries and, of course, exporting its overcapacity on the Belt and Road and getting some dividends. The problem with this is that if you compare China with Japan in the early 21st century, Japan had invested a lot abroad. And Japan was growing old as well, but getting dividends from the capital it invested. China has invested, not yet enough, probably just started investing in 2005, 2006, but the dividends from those capital invested abroad are not yet coming. And sometimes the investments were wrongfully done. If you look at Africa, not all the investments were properly done. And if you look at other countries, of course, you have barriers now raising. So it's a solution which might be very, very difficult to achieve. As a true believer of Chinese innovation, I think Chinese innovation will surprise us in the future. I think, of course, we have to watch very closely, as Alicia will do, at the traditional ways of innovation. But I think China has a talent to innovate where we cannot, and to innovate sometimes in the good enough, meaning spending less, but getting more return out of what you invest in, and also innovating in some new areas. I think the investment into data, big data, and possibly also digital finance is something where China might reap dividends from selling data, collecting data, dealing with the data collected, and possibly also exporting its finance capability abroad. Those are just assumptions. It was just an introduction to the speech by my friend Alicia, which will be much more in details, and I thank you very much for enlightening us with that.
Thank you. Yes, thank you.
Just before we go to Alicia,
Yes.
just so what's your answer to the question? Will China grow old before getting rich or not? Let's say really a yes and no answer, please.
No, let's say we always have to go by the Chinese leader speech. So we will have common prosperity, which is prosperity at a lower level probably, but better shared. But you know, I cannot predict at which level it will be, but better shared, that is for sure.
Well, thanks very much, Jean-Francois. It's been a pleasure, and I want to just make a little comment before I start on that very good idea of comparing China with Japan, because we should add maybe one more subtitle to our long title for this event, in which we could ask, will China become a rentier like Japan before it gets too old? And Jean-Francois' answer is probably not, because the investments, in other words, China didn't have enough time, as opposed to Japan, to make those investments. And let's not forget that Japan made investments in a world that had much higher yield, which China, compared to China today. So, you know, sometimes I feel it's really not about China. I feel like it's really not, because it all looks like, why is China growing so low structurally? Is it China's fault? Sometimes it's just the environment. China's environment is harder than it was for Japan or Korea, which is the point I'm going to make in the presentation. let alone whoever comes after China. By that I mean further, much worse, because at least China managed to get, all of the WTO globalization advantages. Maybe the next one will be even worse. But I think that's an important point you made, because it takes the focus out of what China might be doing, and or might have done, and it goes much more into when it happened. And I think that's a big issue to compare Japan and China. On that note, I'm going to start, and I promise I would be brief, so I always spend a few minutes commenting on Jean-Francois, but hopefully I'll catch up. So as Jean-Francois said, this is similar. I mean, we're trying to answer the same question from a different perspective, but the answer is very similar, actually. So in that regard, I don't have a firm response, Guntram, but I would argue that it's nice to look at it like it will be better shared, but still low income per capita. I don't know whether it will be better shared, but certainly it won't be South Korea. I mean, it won't be the dream of South Korea. China won't be the dream of South Korea, which doesn't mean it won't be good enough, because China is much bigger than South Korea, so in terms of market size and so on. But if we're focusing here on wealth and income per capita, I do think China will be a different story from South Korea, and that's basically the key message here. So we started with growth, same idea. It's coming down, so I'm not going to talk into that. But yeah, for those who really thought I was rushing, here's the graph. Yes, China has been decelerating. It's structural. We all know about it. It's not about COVID. I didn't even include COVID, just not to lose track of where we are. Is this something to worry about? And the first answer is, of course not, because this is the law of gravity. As you become richer, you grow lower. Is China rich enough to see that reduction in growth? Probably yes. It's still a very high growth. In fact, here you just see how much China has been an outlier, positive outlier. So basically 99%. China was literally in from 90 to 99% percentile of countries in the same, like kind of very low income per capita. So China did great, especially from 5,000 to 10,000. Not the poorest part, because that's, of course, times that we might want to forget, from Mao to the Cultural Revolution. And that's the first graph. It wasn't great, but it was actually better than others. 90% in the 90% percentile. Let's acknowledge that. And then these times were Deng Xiaoping's time and all of the others. And it was even better, 99%. Will it continue to outperform? And before I answer that question, I just want to have a sense of where China's growth might be by using a very rudimentary tool, which is just a convergence model by which you take, basically it's a linear, it's just use the linear trend of labor productivity, and you just figure out a number that is like, if things were going as they go now, or they've been going for the last 20 years, where would we be in 2030, say? I mean, this is, and we would be, and by the way, this is actually a positive scenario, let's face it, because this taking into account all of the good things that have happened to China so far, because we're using the past for this. So
population growth is still positive. I mean,
no, of course, we are taking into account what we know, which is labor participation rate. So that's, of course, pushing it down. Adult population growth rate, all of these are numbers that we can't change by 2030. So but in terms of the trend of labor productivity, that comes from basically the 20 years before. So labor productivity in China has been decreasing, and if you apply that to potential output, you come up with something close to 2.4% in 8 years. Are we ready for this? I mean, is the world aware that China will, unless the US does very poorly, not converge anymore with the US? That's the message. Maybe it will converge per capita because of the huge difference in labor participation, between the US. But I mean, this is the Japan thing. Maybe, you know, you're not as poor as you think because we're fewer in town, but that's not necessarily a wonderful reason to be happy about, you know, your convergence, yeah? So this is the reality, and the question is, can this change because of innovation? Can this change because of, who knows, China becoming the largest economy in the world and setting its own standards? You know, there's many reasons why this might be wrong for exogenous reasons, and that's what I want to analyze very quickly. So before I do that, I just want to say that how bad is that 2.4% in 2030, or the other number I had, which is slightly higher, 3.6. So the average of the, you know, basically this decade is about 4.4. Is that very bad? No, it's not very bad. It's actually quite good. It's just that China was such an outlier. In fact, it's around Japan and Poland. It's around, but it's not South Korea. So my message is, don't think that what China is going through is such is a despair situation. It's actually among the best in the world if we have estimated that long-term growth correctly. Unfortunately, it can get worse, and the question is why, and I want to get into that. First reason why our estimates, no matter how low you think they are, i.e. 2.4% from 2030, might be overestimated because not only is the elderly dependency ratio much worse than it was at the time when South Korea and Japan reached the $10,000 per capita, but actually because the debt to GDP ratio is so much higher. So the room to take care of that problem is much less in China. And of course, the size of the population doesn't really help if you think about it, yeah? The other issue is that, to be very frank, neither South Korea nor Japan, at the time they reached $10,000 per capita, had a real estate bubble. Let's face it, China does have one now, and it needs to rein in this bubble, and it's happening already. I agree with Jean-Francois, China is changing its growth model. And that's great news, wonderful news, but it comes at a cost. The cost of an economy which grows about a third thanks to the real estate. So the contribution of the real estate to real growth is a third, and it's going to detract quite a lot for years because it's not going to be solved in a year or two. So this is indeed a very important issue to realize that we might be even overstating our potential growth numbers. The other one is that it so happens that when South Korea and Japan had to deal with its coming of age, if I may say, i.e. becoming a high-level income economy, nobody talked about, you know, climate change. You know, nobody pushed South Korea to reduce its dependence on coal. But China has to deal with this. And this is, again, unless, you know, innovation, and of course, we see that the use of renewable, at least the target, whether, you know, the use is not yet fully in line with the target, but as you see there, coal still being about around 60% of electricity production. Yes, indeed, China is a massive producer of renewable, but the reality of things is that being such a massive producer, it hasn't yet taken that bold decision, i.e., it must be costly, otherwise they would have done it already, i.e. it's going to have an impact on growth. And I think that's important to realize. So the question is, so what can China do to smooth out to that impact on productivity that we so far have in mind, or we've seen so far? And the answer, as Jean-Francois said, is innovation. Now, there's very little we can really say, to be frank, about the impact of innovation on China's potential growth, because supposedly this is going to be seen in the future. So the only thing I can say is that the first thing you would need to see is an innovation trend that fosters capital-intensive sectors, because, you know, your population is falling. Well, that's not what's happening. If you look at that area there, it's basically increasingly negative, so zero negative, which means that the industrial, so the value added in the industrial sector is growing faster for sectors which are labor intensive, not capital intensive. So that's in a way already an issue. On the fact that China spends a lot on R&D, on research and development, truly, now at the level of Europe, but still well below the US, and by the way, even further away from South Korea, which is 4.4. So it's about half of South Korea. So it's not South Korea, at least in value. Whether China spends innovation or uses R&D better than South Korea, I'm nobody to judge. On education, it is indeed growing, but what we know is that R&D, China only spends 6% of research and development on basic research. Most of it is actually, development or basically implementation. So here you have China is actually much lower than France, Germany, US, or Japan in terms of the share of basic research in total research. And I think that's very important. Because you can be very innovative, but at the end of the day, and this is the IMF latest WIO showing that basic research is really what matters for productivity. So, and if you actually look at labor productivity in China, a very important issue is happening, is that China is moving to the service sector. And it happens to be less productive, not only in China, in Japan, in Australia, we know this. So because it's going through such a structural transformation, it's very, very hard for China to increase total factor productivity, let alone labor productivity. The other issue for me to be pessimistic is that most of the R&D is state-driven. So think about the semiconductor funds, actually two already, $70 billion, well, is state-owned. And how effective that might be is, of course, doubtful, given that overall the product or the basically productivity of the investment in state-owned companies is so much lower than it is for private companies. So basically, I just worry very much that all of that R&D might not be so fruitful. I, however, have different figures, but this is because this is a conference board, which is interesting. It's a US institution that has much higher total factor productivity, Jean-Francois, than I saw from yours, which is a Chinese source. So it's kind of interesting. But basically, barring aside total factor productivity, the rest is falling. So we need to believe in the black box to confirm that total factor productivity will save the day. And by the way, it's not increasing. So the net effect is still less productivity in China for the last 10 years. As if this were not enough, we need to think of the fiscal space. So what you see there is that total healthcare in China is already today at the $10,000 per capita, nearly double what it was in Japan at the $10,000 per capita. Why? Because the weight of the elderly population is bigger today in terms of healthcare than it was then. So that's in itself, and you already see how much the healthcare expenditure by the public sector is increasing. So this burden is going to affect China's public debt, which is my point here. Many people think this is very low debt, nobody cares, public debt in China. I just want to remind the audience that a lot of the real public debt is hidden by the fact that corporate debt includes state-owned enterprises debt, which is 2/3 of that. So if you were to add that, China's public debt today would be higher than Japan, for the mere fact that you are actually counting the debt of the public state-owned companies. So finally, one thing that is very clear is that the external environment that China is facing today is frankly much worse. I mean, Japan got to a point where it was also very bad in the 80s. Yes, but I think that China is facing a structurally worse environment for the mere fact that Japan was, in a way, a military colony of the US. So what I'm trying to say is that China is much more of a risk for the US than Japan ever was. And I think that makes the external environment much more compelling for China. And I think that's something that will make it even harder. As we can see already from the reform of CFIUS or our own screening, investment screening framework in Europe, it wasn't as tough for Japan. And I think that's something that we need to recognize. The environment is hard for China to keep that growth. So in a nutshell, I think we should acknowledge that China has been very successful. That's the first thing. I mean, there's no doubt about it. In moving out of the low income to the middle income group of countries. For the high income, I think the situation is much tougher. External environment, labor productivity, aging, space, fiscal space, you name it. And therefore, for China to be, and this is a key question, innovative enough to overcome all of this, for a population of 1.3 billion, this is not Israel, I mean, I just cannot imagine. I'm not doubting China is innovative. The question is, how much more innovative you need to be for that kind of situation? So it's not doubting your point, it's the degree for what they need to overcome. And I think that's an open question, and I don't have an answer, but my sense is that it needs to be very bold, and China might not even be able to afford it, because the fiscal space is not there. And that's the key question. Again, no answer, but just a sense that it will be very, very hard for China to move quickly out of the middle income trap. Yeah.
Wonderful. Thank you, Alicia, for this very comprehensive presentation. And I have to say for, I think, your pretty clear answer that China will grow old before it grows rich. At least rich in per capita terms. So, look, I think there were many points that you raised that, of course, deserve more debate. And let me also remind our audience that you can ask your questions through Slido. The code is China, and I'll see them right here on the screen. I have 3 questions already. But before coming to these questions, let's talk a bit about some of the numbers that you showed. And I guess the first really striking number for me was the quite low growth number after 2030 that you showed. And perhaps you can just sort of give our listeners again a sense, what is behind that number? I mean, is it a more mechanical projection, or is it based on, I mean, what's the model behind that number? Because of course, that is the key question. I mean, in a sense, is China going to escape the middle income trap, yes or no? Well, that depends on what kind of growth rates we will see this and next decade, obviously. Now, I take the point that there's lots of headwinds, and I think you described the headwinds very clearly. You talked about the real estate sector that has been driving too much the economy and has therefore become too big and is now in the process of being restructured. You mentioned the aging point, and I think that's very clear. Population is, while still growing, is going to peak in 10 years or something of that sort. You mentioned climate change. Well, that's, I think, an open question to what extent China will implement these climate policies, and then a relative lack of basic research, SOEs, and last but not least, the fiscal space that is more limited than that of Japan. I mean, these are all very good reasons, but you can also come up with sort of reasons on the other side, right? And so in particular, I think I would think of the increasing innovativeness that we see, and the amazing rise of some tech companies and some technology, the use of artificial intelligence, the wide adoption of artificial intelligence also. So there's lots of sort of factors that go in all kinds of directions. Now you come up with a pretty clear and bold number after 2030, and I just want to understand, how do you construct that number, and how can you just dissect that a little bit for our listeners?
Yeah, good point. I have to say that maybe I should have added something on the positive, that even if the external environment is negative, we have China, and you mentioned it, Jean-Francois. joining, you know, like RCEP, or, I mean, not joining, actually creating in a way RCEP, which might give China better access to finally what is the largest, I mean, the largest and the most thriving part of the world, which is Asia. So, you know, of course, I acknowledge that although the external environment is tricky, maybe not the external environment where growth is the most obvious, and I think that's to be acknowledged. So I wanted to add that, and I'll certainly add it to the paper once we finish it. But on your question, I mean, now, so just to compare, I mean, our calculations, because the whole idea is that what I've seen on models of, you know, like basically Douglas models on, and we have actually an old one for China, but the best one I've seen, which is World Bank and NDRC, come up with a number that looks like 2.7 by 2035. So the difference. So in other words, I actually don't think it's so much the methodology. It's what I call the law of gravity, meaning if your stock of investment, of your stock of fixed asset investment is so huge as it is for China today, for its income per capita, you don't have a return on assets that looks like your level of development. If you see, I mean, this is kind of a little bit hard to, but what I mean to say is that China is bloated in its stock, in its investment stock, compared to a country of its income per capita. And that means that the equilibrium return on assets is low, by definition. So China has that issue. Of course, aging.
So it's already, I mean, to put it differently, it's already too capital intensive for
Yes,
its level of development.
correct.
And therefore, the future growth will not be coming from
Yes,
capital, basically.
correct.
Right.
And this we know because investment to GDP is 40%. So that's the kind of the thing
That's
that
the
is
crux.
hard to understand, but I
That's
think
the
it's
crux.
essential. It's essential. China is too capital intensive for its level of development.
So any reactions on that point, Jean-Francois?
Yeah, I think in parallel to what you said, Alicia, we should also put the picture into perspective in the sense that China is both a very open economy and an economy which can also close down because it has a huge domestic market. And I think this is really the turning point where we are now. And this period of time where you say, I don't know how long it will take, but it will probably take a long time. I think it's probably in the planner's mind currently. And the fact that China is gradually closing down might be also correlated to the fact that the planners, the leaders, know that it will take some time. So you gradually close down so that you boost your domestic market. And by the time you induce foreign capital, we didn't speak too much about foreign capital, because whatever capital is lacking in China might come from abroad. And what you can see currently is that this dual perception of China by industrials and these industrial firms who say, well, we are kind of scared by the closing down of the Chinese market. And on the other hand, investors who say, well, the Chinese market is still very attractive because there will be innovation. So you might have a China which closes down in terms of, importing goods, but opening up in terms of importing capital, and that can bridge the gap somewhat. I'm not saying it will totally bridge the gap, but it might help gradually bridge the gap. And of course, that will take some time. And meanwhile, you just close your eyes, you close the market, and possibly Chinese population cares less and less about what's happening abroad. It's a very political stance I'm taking. It's different from a purely sectorial approach and economic approach. But I think this also has to be taken into account.
So we are receiving already lots of questions. Very popular event. And let me just read the first two to you, and then throw them at both of you, and you react. I mean, the first one is about US pressure. So Anonymous is asking, how much will US pressure influence China's strategy to neutralize at best the challenges you outlined? The second question is about China's success in innovation appears to stand or fall with its success in developing high-quality semiconductors. What's your view? So one on the semiconductors, the other one on how how US pressure is actually affecting the Chinese growth model. So perhaps you start, Jean-Francois.
Right. Well, foreign pressure, I think it's very ambivalent, because so far China cannot do without taking into account what's happening abroad and what's the foreign look at what's happening in China. Conversely, as I try to say, China is very able, as we can see currently, to close down somewhat for a while and just deal with its own problems by itself. So yes, foreign pressure is important, but at the end of the day, what is most important for Chinese leaders is how harmonious is the society inside, and not caring about what's happening abroad. In terms of semiconductors, I don't have a clear answer, but what we can see so far is that capital spent on semiconductors is not yielding as much as it does abroad. Take Taiwan, take Korea, take US. So there is obviously a gap in terms of yielding on the capital that you spend on semiconductors. I don't know why. Well, I know that many places had a time lead to China. That might be the explanation.
Yes, the first question I think is what I call the Sputnik moment. Basically, whether the US pressure is actually creating, I wouldn't say a miracle, but basically accelerating that idea that China can be very innovative, simply because all of the forces align towards that objective, yeah? And perhaps one could argue that we don't see in the existing data, whether it's labor productivity or total factor productivity, that increase that will come out of China's united response, if I may say, to the challenge. And so far, so good. And one could argue that there has been a number of, China, Made in China 2025 started before Trump for obvious reasons. So it's a 2015 project. But one could argue that China was so, visionary, and kind of figured that the West would come after China and already prepare its own industrial policy, you name it. In other words, I don't know whether this is a response to or China's own, vision of what China needed to do. But I think the ultimate issue is whether we believe, and this is really for us economists to decide where we stand. I stand on the side that if you're not open, you cannot catch up with innovation. That's my standpoint. I may be wrong, but that's the way I've been educated, and somehow I.
So that argument also holds in a big economy like the Chinese one,
yes,
which is as big as China.
Yes, as big as China. That's my take.
Why do you take that view on an economy as big as China? I mean, if you compare it with, let's say, Japan of 30 years ago, I mean, the rest of the world was almost not much bigger than China is on its own in many respects. So isn't China big enough to have enough regions and differences and to
be at the
frontier of research?
The frontier of research. Well, not yet. I mean, that's not what the data shows us. Yeah, in many sectors, China is still lagging behind. So if China closes down, it will be harder, by definition, to catch up, no matter the size of the market. Maybe China will have a lot of data, but that data is not the core of innovation, at least not yet. Data is the basis to use the innovation, but if you not reach that level, I don't think data can solve that problem.
Unless you find a way to extract value out of data.
No, that's a commercial response, and on the commercial value of data, there's no doubt. But here, the question really is whether China can leapfrog, basically, its innovation capabilities out of closing down its economy. This is the question. And the answer to me is maybe it can, but it will be harder, not easier. I mean, that's in principle. So the Sputnik moment would be easier if China didn't close down, in a nutshell, in my opinion.
Right.
And so the direction of the direction China is taking, to me, is worrisome rather than a solution. But that's all.
There's many questions going in a similar direction. So let me just throw two further questions at you, and you react to them. I mean, so one by Kim is, how does the recent tech crackdown, what does that tech crackdown tell us? Will it actually hinder China's innovation? And I guess related to this is the question, in a context in which growth becomes harder to come by what type of policies do you think will shape common prosperity? I mean, which is, I guess, linked to this question of the tech crackdown. So how do you see this tech crackdown, innovation, and then common prosperity?
Well, Jean-Francois,
Alicia, you start.
Yes, I start, okay. Okay, the tech crackdown. First of all, this is not only tech, it's a much wider crackdown. I showed a graph on the real estate sector. It was indeed a crackdown. It was not coincidental. So you had these 3 red lines by which, to leverage developers would actually not get any access to bank loans, and therefore, we ended up with cases like Evergrande. So in other words, this is not only a tech crackdown. I think what it is a crackdown with a slight, if not strong, leaning on a private sector crackdown. Because if you look at the companies that have been basically affected, they're mainly private companies, including the real estate developers. And when I say private, I mean to say not in the realm of the state or the party. So I would exclude Huawei, because that's so. It's a very special type of companies that have been. It's not a sectoral issue. It's a kind of a how far are you from the center type of reason, and how important are you given where you are. So basically, if you are important and you are far, you're a target. And I think that's what it is.
So it will affect innovation?
Yes, it will affect innovation, because basically to be innovative, sometimes you need to be far from the center. Yeah, I mean, that's the whole idea of innovation. And I think that in itself will reduce innovative, this innovative spirit of Chinese companies, because they know that they could lose the excess profits of their innovation. So I think what the government is trying to do, which is smart, I have to say, is push the innovators out of the sectors that may be very greedy and profitable, like, I don't know, like video games, you name it, to the maybe less profitable but most important sectors, semiconductors or others, yeah? But, gearing or how do I say, like shaping innovation in that way, you may lose part of the talent, yeah, because they want excess profits. So the answer to that question to me would be, it'll be harder than it was before. Common prosperity very quickly. This is a complex issue, but to make a long story short, you have President Xi's speech on the 15th, I believe, of October, explaining what common prosperity really was about. And I want to, because this is a European audience to some extent, although maybe not fully, given the questions. The whole idea,
audience.
Yes, the whole idea is it's not welfarism. It's not the European welfare state. There's even a comment on, we don't want to promote lazy, like it's very, very negative on, to be frank, on our model, but that's a different topic. It's a different thing. It's about controlling the resources, which, by the way, will be less and less. We showed that, yeah, less and less. Controlling from the center to be able to redistribute in a way that fits the model. Yeah, and nothing wrong with that, because if you have less resources, maybe I would do the same. But let's not, let's not think that this is just a purely, automatic stabilizer by which you redistribute income. If that were the case, they would have done a huge fiscal reform, which they haven't. So I don't think that's the model for China in terms of common prosperity. Yeah.
Well, perhaps in the same spirit, Jean-Francois, to push you a bit, on this question of governance. Basically, I think part of the answer of Alicia, you can paraphrase it saying, well, ultimately, it's the private sector, it's innovation, it's entrepreneurism that will drive innovation. And of course, as China's governance model is becoming more intrusive, and the government is perhaps more intrusive in the private sector. But by the way, not only in the private sector, but also among individuals, and is cracking down on very rich people also. We saw, I think there was a big piece in yesterday's or today's Financial Times by Gideon Rachman, sort of pointing out how difficult it is to be a billionaire in China. So that all of that changes incentives for people to strive for innovation, for being ahead of the curve, for growing. How much of an effect does it have on growth in your view, and how much of a positive effect might it have on inequality? Because inequality is very high in China.
I think the fact that the state is so important and the party is so important is a blessing and a curse, because it's a blessing in the way that it's able to plan and to allocate resources, to have a view. And very often when we observe China, we can say that as compared to our Western democracies, you do have a long-term view, which was our topic today. Having said that, when basically you tighten the control as it's happening now, you have a squeeze possibly between the ability of large companies to be the engine of innovation because they are big, and the inability of real innovators, which were really helped in the last 5-10 years. When you were going to China, in the last 5-10 years, you were seeing clusters everywhere. Every university has its own cluster, and it was innovative. I don't know how much this is still encouraged, because this was a mixed economy. You had some private capital working in the labs, and you had researchers working in the labs as well. I don't know how much this can be pursued in the current ambience, where basically you scare people who are trying to make rich. So I think this is probably where the curse is taking over the blessing currently. We do have a potential impasse there.
To push you further on that point, a person called John Gibb is asking the question about the atrocious state of China's governance, which China exports, including through the Belt and Road Initiative. And where's the WTO is the question. So how much is the governance model affecting countries, companies, etc., beyond their border, and how much of a negative effect does it have on China itself?
Just in a very short answer, I think the general mood is currently churning, is changing. There was an appetite for welcoming China in the various initiatives, and during the last few months, I would say, if not the last few years, the mood and the climate is changing around.
You agree?
Well, we published a report here at Bruegel, at least 2018, I believe, just to sense that absolutely, Jean-Francois, the mood is changing. But I just want to go back to that report where we use big data. It was media all over the world. including in Europe. And it was very interesting that the average image of the Belt and Road was positive. The average image of China was less positive, I have to say. I mean, we compared the two. I mean, this is a very general concept, China. I mean, who knows what you're measuring? But the point was that the deterioration in 2018, in the course of 2018, was already very fast. And we tried to figure whether this was the US media, because, you know, kind of influenced by the change in the US, kind of the US approach to China with Trump. And interestingly, that was part, but not all. The most negative issue, which we found explaining that worsening, was trade. Was absolutely, and it was related to countries which were worsening their trade balance with China. So what I'm trying to say here is that maybe it's governance, maybe, but you know, people feel it in their pocket. Yeah, I mean, it's when China became pervasively better, if I may say. If you look at the pandemic, yeah, China's trade surplus has ballooned. Europe and the US have worsened. People don't like that. I mean, right or wrongly, we tend to think we criticize the governance level, but it was there before. You know, like, why now? And I think partially because we feel we're losing ground versus China, that we are having this response. I just wanted to say that. I do think that is that relative, you just said it before, that maybe China will converge because we will do so much worse. But that explains a lot of that thinking, negative thinking on China, yeah, which might be unfair because, you know, China is not responsible for our own mistakes. But it is very much related, I think, to the relative situation. Yeah.
So I have a last three quick questions for the last 3 minutes, and I think they are more from a European audience. So let me just read them to you, and I think get you react. I think the first is about how do you see China's development in artificial intelligence over the next years, and to what extent do you think will China take into account the discussion of trustworthy AI that the EU has, but also the EU and the US in the Trade and Technology Council. So this is one question, AI and the transatlantic discussion on trustworthy artificial intelligence. The second question is on the internationalization of the renminbi, the yuan, and you know what it means for the growth trajectory of China. And last but not least, and I think we talked already quite a bit about the authoritarian state, so I'll skip that. So the last but not least, I want to talk about sustainability. So to what extent sustainability questions will influence and alter the growth direction of China, that might also relate to the question of natural resources that have to be imported. That is also a question that arises here. So those three questions: international role of the renminbi, sustainability, natural resources, and AI, trustworthy AI. Perhaps you don't answer them both, but you split a bit the answers. So why don't you start?
I think internationalization of the currency, we both have worked quite extensively during the last 15 years, and I think we changed minds several times, but I think now it's very clear. It's internationalization the Chinese way, meaning going through digital mostly. And once again, I take your point. It's commercial value which is added, but there will be a value added through the international internationalization of renminbi, because settlements make money. And if you settle in your own currency, you do make money. So that will add some points in GDP growth. AI, I think we only see the tip of the iceberg. I don't know exactly to which extent China is developing AI, but basically it's a very, very strong engine for growth as well. But I don't think we can see the whole picture at this juncture.
Well, I'll take the sustainability because I guess, I mean, on digital, I fully agree. This is the way China is trying to internationalize its currency. It's a new way. It used to be offshore centers. We wrote actually a newsletter on that.
The
on our
digital one.
Mundus. Yes, on our Chonghua Mundus. These two, one on the tech, one on the internationalization of the renminbi. It's a little bit older. But we make that point, Jean-Francois, that China is trying a new way so that in principle they don't need to open the capital account while still having an international currency. I mean, they open it, but they check it, you know what I mean? Because all of the transactions can be monitored. So that's one. And indeed, it's very important. I think we're underestimating the importance of this event. I fully agree with you. And on sustainability, I mean, China is very clearly not ready to follow instructions on this one. And rightly so, if you ask me, because, you know, it's just China's competitiveness, external competitiveness, depends nearly as much on the cost of energy as it depends on the renminbi. And we forget, I mean, the electricity in China is very, very cheap. China is not going to give up on that. You know, at the same time, it is digitalizing its industry. It wants an industry. Why kill it just to introduce, you know, renewables all of a sudden? I don't think China is going that way. I think it's going to be slow. And China won't be pressured, if you see what I mean, like from the rest of the world. I don't see that. And at the same time, a little bit like Europe, but I think in China much more the case, climate is a business opportunity.
Right.
80% of solar panels to first be sold overseas rather than necessarily being used domestically. And that's China's model. It's always been, is the case even with vaccines. I mean, they started exporting before they vaccinated. So it's not a criticism, it's just a business model. I think we need to realize that. And that will make climate change slightly, probably less speedy than we think it should be here in the West.
Wonderful. So if you liked, as an audience, like this conversation, please make sure to subscribe to our newsletter, which is a monthly newsletter run by Alicia called Xungsha Mundus, and it's run by Alicia and, of course, the entire Bruegel team. And it always chooses at least one, if not two, topics of major relevance for the Chinese economy and what the Chinese economic developments mean for the world. It's a wonderful newsletter. Please subscribe to it on our website, and you get more insights as you just got in our event. And let me thank you, Alicia, and you, Jean-Francois, for the wonderful discussion. And again, thank you also to the audience for the great questions we got. Until next time, bye-bye.
Thank you. Bye-bye.